Absolutely, banks can legally take your money. This has happened in the past. It's likely to happen again. So when you deposit money into a bank account, that money is technically no longer yours. You've loaned your money to the bank for them to invest in often risky ventures. Now, in the 2008 crisis, we saw the extent of how much risk banks were willing to take with, of course, our money. And very little has changed, by the way, in oversight. So back in 2008, banks were failing the government-initiated bailouts. That's a term that most people are familiar with. And through the TARP program, the government injected billions of our money, taxpayer dollars, into the system. Now, this was a learning experience. New laws were created at the time, including what is called a bail-in, the opposite of a bailout, if you will. And these were policies that allowed the troubled banks to, instead of taxpayer money, to use customers' money. Now, not many people actually know what a bail-in actually entails and how money can essentially be taken from you by your bank at any time. Now, this policy, it's now applicable to US, UK, and Canadian-based banks, many others as well. And most people, through normalcy bias, deny that this could or would ever happen. But it has happened. And this is something that is most certainly going to affect us all at some point in the coming years. Now, we're going to look at bail-ins in a moment, how they work, but there are other ways banks can take your money as well. So through the right to offset policy, most banks, if they so choose, can also take your money and reallocate it to your outstanding loans or taxes. Now, check your agreement, the one that you have with the bank. Chances are that you signed a right to offset clause. Now, if the money was actually yours, you could refuse this, but the bank, in cases of outstanding balances, actually controls your money. Now, banks can also refuse to give you your money in certain cases. There are many stories online right now of customers trying to withdraw cash, even just a couple of $1,000s in some cases, being grilled by the bank on the reasons why they need this money before releasing it to you, or in some of these cases, denying access to your money altogether. Banks can refuse access to your own money if they choose. Banks also, if they don't happen to like your political affiliation, can close your account at any time or refuse your ability to open up an account. Regardless of your own politics, the fact that banks can cancel you at whim should really scare you. We are living in that dystopian future we were all afraid of, where just because of your beliefs, you can be cast out from society. Now, as banking has become a cornerstone of our lives, we can't live without it. Thousands of accounts so far have been shut down by banks over the years simply because of the account holders' politics. Banks, along with the government's help, have also seized billions in assets from members of other countries simply for being a citizen of that country. Now, most of them don't even have a direct affiliation with the government. Now, that's a similar situation to your funds being stolen from you simply based on who your ruler, your prime minister, your president is at the time. Now, again, regardless of your political beliefs, this precedent should frighten you. Saudi Arabia, you may have read in the news, has recently become more vocal against this situation, and this could become a major political issue in the coming days and years. Here in Canada, if you donated money to groups who were protesting the lockdowns, and many people believed that the lockdowns were not achieving the intended goal and wanted to end them, if you donated money to them, weren't even actively involved, your bank accounts were arbitrarily frozen. You could not pay your bills, pay your mortgage, or buy food for your family. And again, regardless of your political beliefs, this should scare you. And most Canadians, even those who were against the convoy, realized that this was massive government overreach. Point being, again, the precedent at any time, based on your views of politics and policy, banks can and have taken people's money. Bail-ins are another story entirely, and people should be aware of these policies that legally allow the banks to take your money. So how do these bail-ins work? Let's say a bank engages in risky activities. Of course, that would never happen, but if it did, the bank is now in danger of default and considered a risk to the banking sector. Now, instead of using taxpayer money, the banks can use customer funds to bail itself out. Now, in the USA, bail-in is accomplished via the Dodd-Frank Act. In the EU, they introduced the Bank Recovery and Resolution Directive, and in Canada, the Bank Recapitalization Conversion Regulation, which empower the CDIC to essentially take control of the banks and redirect funds as they see fit to save these failing institutions. Now, in Canada, we have received verbal assurance that regular depositor accounts will not be used. But the legislation itself, if we look at it, is much more vague, stating that certain bank liabilities could be used. Now, technically, when you deposit money, you are lending it to the bank, and on the bank's balance sheet, you as a customer are considered a liability. We do have some precedent on what actually happens, as these bail-ins have already occurred in other countries like Cyprus. Now, when put into practice, even small account holders had their money confiscated. A total of billions of dollars evaporated, with these account holders having their cash seized and replaced with worthless bank shares. Now, even smaller account holders, this is under 100,000 euros or less, they paid a penalty. Now, customers had been given assurances, just like we are today, that this would not happen. But at the end of the day, to most people, the bank was stealing their money through bail-in policy. Now, what was especially troubling is that huge financial institutions got all of their money back, while the small depositors got stuck with the bill. But that could never happen here, right? In a major country, major economy, the little guy is always protected. Well, in 2005, changes were made to bankruptcy laws, making derivatives liabilities not depositors most senior in the list of who gets paid back first, meaning that technically the little guy is now further down the pile of people who get their money back. Now, if you haven't noticed, one way or another, the little guy always gets the short end of the stick. Now, the finer details are going to be determined over time when this actually happens, but make no mistake, governments have the statutory power to direct your money in times of crisis. Technically, depositors should be covered up to the amounts insured by the FDIC in USA and CDIC in Canada. That's $250,000 in the US. It's only $100,000 here in Canada. Amounts over that could be at risk. But in times of crisis, rules of the game often change. Politicians and banks, they claim we're safe, but in Cyprus, while even small depositors were locked out of the banks, a portion of their money was indeed being used to keep that bank afloat. In Cyprus, holders of accounts over 100,000 euros lost almost half of their savings. And this wasn't just millionaires and billionaires. Many older people who had worked hard their entire lives saving and scrimping money, being frugal, saw their savings evaporate virtually overnight. So we should not be overly complacent. We should consider the rules of the game are going to change. Crisis, it's been a constant throughout history. We're definitely going to see it again. The only question is when. And for fellow Canadians who think Canadian banks are failure-proof, you might want to watch this video above and a quick 50-second video of how much of your money is CDIC insured. I'll put that link below. Thanks for watching.